All right, Matt Davio back with the Friday chat with Greg Harmon. Greg, thanks for coming on.
Sure, no problem.
This late or mid-morning here in West Coast, early afternoon for you back in Cleveland. So we were having a little fun this week talking about the Tribe and the Tigers. Tigers going for their first division championship in 25 years. So you got to give us, former Motowners a little love. It's been a long time since we won a division title.
Yeah, you said we were having a little fun. I think you were having a little fun. My Tribe's just been sliding.
Well, I don't know what it means to win the weakest division in Major League Baseball, but let's call it what it is. The funny thing about the Tigers is we do have the best pitcher in the major leagues with Verlander, but we also have pretty much the worst pitchers besides that. And I've never seen a team score 8 or 9 runs and not be safe as much as the Tigers have been this year. So I expect their playoff run could either be very exciting or could be over very quickly. But at least we have that going. This weekend, more importantly, before we get into markets, we have Michigan Notre Dame battling I guess many would say the battle of the number 1 and 2 programs of all time, winningest programs, but haven't been that exciting the last decade or so.
No.
But it's still a big game. First night game ever in Ann Arbor, so I'm excited about that. Bummed I can't be back to use my season tickets, but as we were talking about, life happens and kids keep us preoccupied here.
Yeah, having gone to a college with a basically non-football team, I can root for whoever I want. So college football season is pretty good for me. I get to watch all the good games.
Yeah, and there should be a couple good ones. I think we have Penn State, Alabama this weekend. Like I said, Michigan, Notre Dame, which is always worth turning on at least, see if there's a game. But so what do you see? We're back here at the levels where we're down for the week now in the ES. You and I both agree we're still in this bear structure. Probably, in my opinion, until the ES is closed back over 1260. So you continue to be a broken record. I do, at least, by saying sell the rips. This week you had a well-telegraphed speech by Obama and Bernanke that we ran up into, which to me is always a basis for sell it, sell it, sell it. And then today you cover it. So that's happened. And that was really your only trade that I saw for the week when it comes to the macro market. How about you? What are you seeing out there?
No, I agree. It's been bear flag in all the indexes. The one thing that I saw that was a real opportunity is when gold took a dive was an opportunity to get into gold. I see bonds continuing to fly after some consolidation here. So for me, the TLT, I'm looking at it going to 120 now.
Yeah.
But I haven't actually traded a whole lot this week.
Yeah, I didn't either. Like I said, that selling of that kind of that 1185 to 1205 area was what we were waiting for, and we got that the last yesterday and Wednesday. It was a short week, light volume, and again, I'm surprised we saw it, quite frankly, but we got it, and now we're pushing down to the open lows that we saw on Tuesday after the cram down. So we closed.
Got short.
Just got short some more. All right. Well,
just got short some weeklies here.
All right. Well, it's an interesting market. What do you think of this plan that was thrown out there yesterday?
Obama's plan? I didn't hear anything new. Did you hear anything new?
I didn't hear anything new. And I think that was very clear with the telegraphing of the news for the last 3 or 4 weeks. I mean, it really kept getting weaker and weaker, and I think the market knew that. And again, just to see that stair-step walk up, Greg, the last 3 days into this news, 6%. I mean, they had a 6% rally off the open on Monday. And here we are Friday back to where we were on Tuesday on that open, post-Labor Day. Traditionally a light trading week, and the volume was, anywhere 20 to 30% lower than normal volumes on the New York Exchange.
Yeah, very light. People thought last week was light, this week was light.
Yeah. And I think that's usually the case. Again, a lot of people extend their trips a little bit. It's only a 4-day week anyways. I think next week will come back. So, we're rolling into into the December contracts now when it comes to the future. So we're in the final stretch of 2011. What do you see out there? What do you see playing out?
Well, I guess the biggest surprise to me has been the dollar. I've been looking at that as being in a very long-term bear flag. And with the move today finally out of that channel between 73.60 and 76, and going up to test the long-term uptrend line that had been support that it broke down, it's really getting to a point where, over 77.50, I think everyone starts to get along the dollar again.
Yeah,
and it's done. Yeah. Total reversal there. So that's been the biggest surprise to me. I still see, as we said, bear flags in all the U.S. equity indices. So I see like a measured move coming on the SPY down to 95 area, somewhere in that range.
Yeah.
How long is it going to take, and is it actually going to happen? You know as well as I do.
Yeah.
Could just totally flop out. But
exactly. Yeah, it's you and I. It's interesting. We probably had a half a dozen of these conversations talking about the dollar, and I've been pretty bullish. And I've been early. I've been buying down near that 74 or 75 area, and finally getting that breakout has been nice. But it's not fully broken out. I agree but the thing that you look at the time, I mean, you're really going back to a range, as you said, that 73 to 77, going back to March now. And we break out of that area, like you said, there's going to be a lot more technicians getting long here. And I think with that, you're still going to see a big press down with the election year. I still will go out and say this, along with that dollar bullish, which I am. I'm bearish equities. I'm bearish the S&P, and I'm bearish oil. I think all assets are right now still pointing down due to that dollar peaking up. And it's kind of a perverse world right now, but that's kind of where we are. And a lot could change with everything that's going on in Europe right now. That could change quickly, fast, swiftly, and you have to have, I think, be able to switch your hat pretty quickly if that changes.
Yeah, no, I agree. We haven't talked a lot about oil, but oil had, I think, a good week in terms of the bear case. You're coming back and retesting that 88.50 support resistance level, breaking through it a little bit up to resistance at 90, and now falling back again.
Mm-hmm.
I'm with you there. 81, and then below that 77 on West Texas.
Yeah. And then, so gold, like you said, although we shook off there from 1920, first off down to 17, and now we're sitting back here in the middle, 1850. Do you think we still have a run? To me, it still looks solid on pretty much any chart. It hasn't really broken down even on a 240. You got a possible, head and shoulders forming on a 240 minute. The daily still looks good. Where do you think we're going to hit that 2100 before we pull back? Are we going to ever pull back?
That's the question, right? It's the 10-year uptrend.
Right.
So, 1930 I thought was a good level to test and bounced off of that. And I talked about last week on the weeklies that you get through that level, you start to look at moves up to 2250.
Yeah,
as being the next range.
Yeah, and the weekly chart it's solid. There's nothing, and the monthly even is solid. If you pull back somewhere even into the 1500s, and
exactly 1550, it's still an uptrend.
Yeah, I was kind of hoping we might see that 1500s when it was pulling back. That's where I would have liked to buy, but I did not buy. I'm flat gold right now, but I did take a little bit on that short side that bounced down, but I don't know. Yeah, I mean, I'd be looking, like you said, 21, 22 before I'd be looking to overextend it again. But boy, it's interesting watching that thing.
Yeah. Rather than going full hog, I went in with options yesterday.
Yeah.
Back in on the gold, or maybe it was 2 days ago.
Yeah.
With some October options. So I'm in the October 185, 190 call spread on the GLD. Sure that the 163s against it got in for credit.
Nice.
So
again, you're doing a little spread trade. Yeah, just trying to collect the gap there. I like that.
Yeah, pulls back to 163. I'm happy owning it there.
Yep. So let me ask you, with earnings coming up here again in October, our last ones for the year, I kind of think that they're going to be a little soft, and I don't think the equities are, I don't think they're really reflecting that, even though we've had the 20% haircut. Do you think that could be the impetus to push us down a little bit further?
Yeah, I think it depends on where it comes from, though, because the 20-odd% downturn, if you look at the retail sector, I often look at like the teen retailers because that's or the preteens. Those stocks, some of them have dropped over 50%. So they're not going to lead the market down lower.
Right.
So it's not going to be like a consumer discretionaries. It's going to be something else.
And what do you think that could be?
Well, that could be in the energy sector. Yeah, some of that stuff's been hit. Some of the commodities stocks have been hit hard. Steel stocks have been hit really hard, but then bounced really back a lot yesterday.
Right.
So there's a whole lot of different things that could turn us around. But what keeps me thinking the same way you do is that the leading sectors continue to be consumer staples, utilities, and healthcare.
Yeah. Yeah, like you said,
until that changes, it's a down market.
Yeah, and the banks obviously sitting down near the lows, as you said. A lot of the trendy retail names are already cut quite a bit. So it's going to have to be some of those safety issues, as you said, healthcare, energies, utilities. That makes a lot of sense, and they're still kind of hanging up there. And those are a big percentage of the S&P, and that could really put some damper on the market. A lot of the strength in the market that's still there in the S&P is because of these energy and oil plays. So, what is it, 20, it's probably somewhere around the 20% nominal of the S&P is made up of the, you call them energy names. So energy / oil / natural gas, etc. So that's a big chunk. And if oil prices were to come off again, that again, we're in this real perverse world where everything moves together, and whether it's oil or stocks, they're all damaging, if they go down.
Yeah.
I mean, you could have stocks go down and oil just kind of hanging there, and then oil goes, and it's like, so each one is another layer of pressure. It worked well when we were
reinforcing.
And it worked well when we were going up with all that, TARP 1 through 15, and now TARP 17 that was issued last night, as you said, nothing new there. I mean, isn't this the same TARP that Bush was talking about? I mean, another $500 billion. What was his first? What was the first TARP one? Wasn't it 250 billion? I don't even remember anymore. It's been so long.
Yeah, but hey, we can wait till the Fed meeting, and everything will be solved then, right?
Well, but this is funny that you talk about this, because it almost feels right at that moment where we were in 07, before we fell a little bit, and before we really fell into 08 and 09. That's when we started having all this, all these intervention meetings, which we're having again. And you're almost like, why are we having all these things? They know that there's something underneath the sheets, but the market doesn't.
Yeah, probably more importantly to me in terms of the sentiment, they should be having these meetings. They should be having them every day until they figure out something that works. But kind of stepping out there and telling us that they're going to have a meeting,
right? And
telling us, well, here's some old ideas, and next week I'll tell you how I'm going to pay for them. I think it makes it worse.
Yeah. Well, again,
don't do this stuff and figure it out, and then start doing it. And then, don't tell us you're going to figure it out and then not be able to do it.
Yeah, the old cry wolf is just getting old. I think even it's dripping down into the retail, the street level. Guys are getting I'm starting to hear it from people that they've been through this game and through this rinse cycle once or twice, and they're not even in the business like you and I are. So, I think when that starts to happen, and it starts seeping into the consumer mindset, it's becoming again much more powerful and pervasive the less they have these non-meeting meetings.
Yeah, exactly.
All right, so
then you look back at the global economy and how that relates to the U.S. marketplace. And if Europe was healthy, if Europe was not imploding, I guess is probably even better. What would be happening with the U.S. market? And money has to be flowing from Europe into the U.S. I wrote something about the money flow comparing the DAX to the S&P. It's been a huge flow the last couple of weeks comparing those two, and that starts to reverse.
Right.
If anything starts to look better in Europe, we're crushed here.
Right. That's true. But they got to get through all their, maybe the baton is handed, and some people start protesting a little bit more there or here from there, and once that happens, like you said, maybe that money shifts again, and that puts a whole nother level on it. So I think the point is the danger has been, is, and will continue to be in all these things are so tied to, let's call it the dollar. They're all one asset right now, whether it's U.S. equities, European equities, Asian equities, whether it's energy, utilities. These things they're all moving as one vehicle almost right now.
Yeah, that's actually a good point to point out to everyone, is that if you look at the index charts, there's so many individual names that are moving exactly 100% correlated with the indices, and those are the ones you just want to stay out of. They're not worth looking at.
Right.
But there are those stocks that are holding up and those that are breaking out. Look for those that are not moving exactly with the indices, and that's where you're going to be able to create some alpha.
How do you run some scans to find those? Any suggestions on how you go about doing that?
Well, there's a lot of products for that. A lot of people use like FinViz and things like that. I use a proprietary H2I system, which is Greg Harman's 2 eyes, and just look at hundreds of charts day in and day out, see what looks different.
So it all comes down to hard work still, Greg, and doesn't matter what your business is, you got to put in the time. So keep watching Greg's work. He posts a lot of fantastic charts, and we'll continue doing these conversations. Have a great weekend. And
you too.
Thanks. Enjoy the Indian summer.
Yeah. Hopefully we'll get it here.